Hello friends, this is Raj Sastry from Raj Option Trading. Today is Feb 19, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to trade options and make profit from it. So with that, let's jump in and get started. Look, if you're a beginner to options, I highly recommend to start with Bible of Option Strategies. And this is a great book. It's an easy read by Guy Cohen. I think it's a good one to start with. It will basically teach you the option strategies in a simple language that you can follow. So once you master this book here, next book I recommend is really Options as a Strategic Investment by Lawrence Macmillan. Larry does a great job. It's a thick book, but it's a good one. It's got a lot of great details and examples. And once you kind of understand that, I recommend you to look at the next one, which is option volatility and pricing. This is a little bit difficult to read for beginners, but once you master book 1, which is Bible of Option Strategies, and book 2, which is Options as a Strategic Investment, the third book here, Option Volatility, will be a breeze for you. So I recommend in that order: first Bible, second Strategic Investment, and third Volatility and Option Pricing. All right, so with that, let's jump in here. So if you're trading options, you got to be quick. It's really for active type investors, unless you are very long-term leap or a long-term call option holder. So look, there are various strategies here. Most of the option strategies are squarely around option volatility. So you got to understand what's option volatility. A simple example of option volatility is shown in this picture here. Look, think about a stock which is right now at $50. That's the current price of the stock. That's $50. If the stock price does not move much, then the volatility is low. Look, if it only moves between say 51 and 49, then the volatility is very, very, very low. That's when stock does not move much. So look, right here at the top, price does not move much. Look, it's a very low movement here. That's when the volatility is very low. So when the volatility is very low, you got to, typically when the volatility is low, you got to be a buyer of the options. Whether you buy call option or put option is based on your directional sense. And also you could look at things like RSI or relative strength index. If the RSI is too high, then probably you would buy put option at the top here. But if the RSI is very low, meaning stock has fallen down, then you'd buy a call option. In the contrary here, when the volatility increases, look, we got a medium volatility here, which is the yellow bar, yellow diagram here. So when the volatility is medium, that tells you stock can move. So look here, medium volatility means stock can move here between say 48 here and say 52 here. Price kind of moves in between these ranges. That's why movement is a little more. So when the volatility increases from a low volatility to a medium volatility, you get a very good option pricing. So you can make money selling premiums. This is where the medium volatility, say around volatility range of 50 or so, you can make some good money in the medium volatility, typically by trading strategies like iron condor as an example, or butterfly. But when the volatility increases, look, we got volatility here increasing big time here. Look at the red diagram here. So look, it's going all the way big time, between 55 and 45. Nice movement in the price in last say 14 days or so. That's when the volatility increases. When the volatility increases, best strategy is to really sell options depending on the RSI or the relative strength index. If the relative strength index is very, very low, and volatility is very high, and then in those cases you could look at selling put options as an example, given stock has fallen down. On the contrary, if the volatility is high and the RSI is also high, then you could look at selling some call options at the top, or even call spreads for that matter, and make money. So we'll jump into these concepts in a little more, and I will also teach you how to look for stocks with these strategies in popular platforms like TradingView, and we'll also look at platforms like Finviz, and we can look at bar chart, which is one of my favorite, and we can also look at platforms like Thinkorswim, and finally we'll go into my spreadsheet where I explain that little more. All right, so let's jump in here and get started. All right, look, very simple. At the heart of options trading, we got four strategies. First strategy is really buying call option, which I think most folks know this strategy. It's a limited loss, unlimited profit. That's why most folks are drawn into buying call option. There's a simple example here. Think about a stock which is at around say $30 or so. And look here, what we're doing is we are basically buying call option. So look, in this example here, we are buying a call option at strike $30 here. Look, that's the strike price here, and current price could be a little bit higher. Look, current price is at $40 right now. So we are buying the call option at $30, which is $10 below the current price. So your direction is really the stock is going to go higher, and you're going to make money. Look, as the stock goes higher from 30, 32 is your break even because you paid $2, as you can see here. As the stock goes higher, you make money. And look, instead of buying the stock itself for $30 by paying say 100 stocks, which is $300 or $3,000, you could just buy call option for $2, as you can see here, and participate in stocks upward movement. And if stocks falls down here, max you can lose is $200, as you can see here. But if the stock goes higher, you make some good money. That's the benefit of buying call options. Buying call options is a bullish strategy, as indicated by green color. And many folks are a little bit worried about buying call options, especially when the market is not going too much. You got to pay attention to the market. If the market doesn't move much, you will lose your money with call options, like most folks who lost call options in software stocks and technology stocks last year. And one more strategy is really, instead of buying call options, you could also sell put options. This is also one of my favorite strategy. Selling put options is a great strategy. In this, there is an unlimited loss and limited profit. And if the stock goes higher or stays the same or even slightly comes down, you can make money. There are profitability or the probability of making money is more with selling put options. That's why a lot of people are drawn into selling put options or put spreads, which is a great strategy. Look, here we got same example here. Stock price is at $40, and you could go all the way down to $30 and sell a put options. And by selling the put option, you can collect say $2 or $1, which is $100, and you can keep that money as long as the stock stays above $30. That's why with the put options, even though it's a limited profit, the probability of making money is much more. That's why folks are drawn into selling put options. I know a lot of people make a living by selling put options. Great strategy. You got to understand the volatility. Basically, when you sell put options, you want volatility to be high so that we can earn some premium for taking that risk. For call options, as usual, you want low volatility environment and you want stock to go higher. And then you got selling the call here. Selling the call is when stock is at a high price at this time. Maybe it's a 52-week high, and you have some directional bias. The stock might come down. Maybe it's a super hot stock which is gone up too fast. and your assumption is here is really stock might come down. So you can sell a call option here when the stock is at 40. You could even sell a call option at say $50, a little bit higher at the stock, for $2. If the stock stays below 50, you could keep that money. So that's why it's a limited profit strategy, as you can see here. And loss strategy is a limited strategy, but unlimited loss. That's why many folks don't want this strategy. Typically I don't recommend selling call outright. You could look at the call spread. That's a better strategy versus a naked call. And then you got buying put. Buying put is a great strategy. If you think stock is going to go down, maybe it's a very high multiple stock, and stock has gone higher, and stock price is currently at 40. If your direction is really stock might come down, you could buy a put option here. In this case, you can buy a put option for 50 strike price for $2. As the stock comes down here, you have a limited loss, which is this $2 or 2 times 100, $200, but you got unlimited profit as the stock goes all the way to down to zero. So that's why, as you can see here, both top strategies have got unlimited profit, and bottom strategies have got limited profit, but probability of making money is more in the bottom strategies. You could that's why a lot of people are into premium selling. Premium selling can be selling call, or it could be selling put. Typically what I love to do is when the market crashes big time, I love to do both selling the put option strategies way below current stock price, and also selling call option strategies when the market is super hot, overextended, gone up too much too fast. I do selling call option strategies, a great way. Some people sell iron condor. Instead of selling iron condor, you should really sell put options when the stock is dropped off, volatility is high, and sell call option when the stock is super hot, it's overextended. So that way, you basically don't sell iron condor right away. Instead, you basically sell a call option when the stock is super hot, RSI is high, or sell a put option, when RSI is low but volatility is super high. So that's a quick summary here. I will also show you a quick summary here, and as you can see here, both buying call as well as selling put, both are bullish. That's why they're in green. Buying put and selling call, both are bearish strategies. That's why they're in red, as you can see here. All right, now let's jump in here and just sum it up here. So when do you buy and sell options is a question folks ask all the time. Look, it's very simple. We got 4 strategies here. You could always do spreading and add more legs. But you buy call option when you're bullish about the market, and typically you want the stock to be a little bit at a lower price. That's why I look at RSI or relative strength index below 50, and you could also sometimes get away with 55. And you want the IV percentile or even IV rank for that matter. I look at the combination IV rank or IV percentile to be less than 40. You don't want too much volatility. If you're conservative, you could even look at less than 35. And when you buy call option, you want time on your side. That's why at least 90-day to expiration, so that way you have enough time to be right. And if you are a very conservative long-term investor, you could even go for leap options or even say 120-day or longer. And you don't want to buy out of the money call option. That's how a lot of people lose money. Instead, you want to go like delta 70, which means the strike price is much below the current stock price. So that's why we call it in the money type call option. It's always good to do that. I will show that in Thinkorswim platform later. And look, you can also sell put options. Selling put options, again, a bullish strategy, as you can see here. Normally I love to sell put option when the RSI is less than 50. You can also get away with less than 55. And you want IV percentile or even IV rank, both to be more than 40. You could do a or, IV rank is more than 40 or IV percentile is more than 40. You could also bump this to 50. Many people look at IV percentile or IV rank to be more than 50. And when you sell put option, you don't want to take risk too far out. 45 to 50 days to expiration is the sweet spot here. You get some good premium. And look, you want the delta to be less than or equal to 15, so that way you don't take too much risk here. As the day passes, the theta decay is your friend. You kind of make money as the day passes with the selling put option strategy. That's why a lot of people do this. They sell put options way below current stock price, especially on this key ETFs like SPY, QQQ, IWM, and even semiconductor ETFs like SMH are great ones. And you could also, if you're conservative, sell put options all day long on great stocks like Apple, Google, Microsoft, Nvidia, AMD, Tesla, so on and so forth. And then you got two more strategies here. Look, selling call option is again bearish strategy. As you can see here, your market direction is bearish, and you want stock to be hot, in the sense relative strength index to be more than 65, meaning stock has gone up so much and you think it will reverse the course. That's why relative strength index, I want this to be more than 65. And IV percentile or IV rank, you could use either of them. Normally I use a combination. You want volatility to be high, so that way you can earn some premium. And when you sell options, typically don't go beyond 45 to 50 days to expiration. That's a sweet spot. You get some good premium. And delta less than or equal to 15, meaning you're selling a call option above the current stock price, so that way it might come down by looking at various criterias. And then you got buying put option, again a bearish strategy here. And here profit is unlimited. As the stock comes down, you start making more and more money here. And look, you want RSI to be more than 65, meaning you want the stock to be overextended and gone too high too fast. And you want IV rank or IV percentile to be lower. So when you buy put option, I would even say less than 50 here. Let's make the change. I want the IV percentile to be low when you buy put options here. I would even say less than 40 here. And you want days to expiration to be 90 days or more, meaning you want more time on your side for the stock to come down. And you want delta to be more than 40. You want the stock to be you want to sell a put option at a higher price than the current stock price, or even at current stock price, so that way you'll make some good money here. This is a quick nutshell here. So with this, what we'll do is we'll go into a couple platforms here. I will show you how to do these strategies in the screeners. All right, so we'll start with the right here. We got stock, we got TradingView here. As you can see here in the TradingView, as you see here, I got various strategies. Look, you can go right here to the filters here. I selected buy call filter that I have here. I will take you through the buy call filter. Look, filter is very simple here. I'm saying I want average 60-day volume to be more than 1 million. So when you buy call option, you want to make sure there's a good liquidity. That's why you want average volume in 60-day to be more than 50 million. And you want price to be more than $30. You don't want to buy call options for very low price stocks. It's many times it's not worth your while. And market cap, you want to be more than 2 billion. You don't want too risky assets that you lose money. and you want free cash flow to be positive, so that way you don't look at money losing companies. You want companies to make some good free cash flow, and you want volatility to be low here, because you're buying call option. If the volatility is high, you're paying too much premium. Volatility, you want it to be below 2.3 here, and you want ATR, or available average true range, to be more than 75. Many times when the stock is bought by another company, ATR collapses, and if the stock is not moving, you don't want to buy call option and get stuck with it. You want stock to move, and you want gross margin to be more than 30%, so that way company is fundamentally sound. And dividend yield, I typically don't like to buy call option when the dividend yield is super high. I'm saying below or equal to 3%. And then you got a few more things like beta, relative strength index. I want it to be below 51, so that way stock is sold off here. Beta tells you it's whether it's trading along with the S&P 500 or not. I want it to be at least above 0.5. It kind of, if S&P 500 goes by $1, this will go up or down by 0.5. This is a good one to have. If you're super aggressive, you could even increase it to 0.75. And we got current trading day checked, and we got net margin to be more than 5%. I want fundamentally good companies, and I want total revenue to be more than 100 million, and I could even drag it all the way to the side here. Look, it's very simple criteria. I want companies to make money. That's why total revenue is positive, especially in this market situation. So I could click on this here, and I could go and save. Many times folks wonder how to save. You can go all the way top here and save screen as, and done. Look, now we have our match here. Out of all the stocks in the stock market here, we just have 36 matches here. Very simple to go through here. Once you have this list here, you could just click on it, and look, we got Visa at the top here. You could look at Visa. Look, Visa, it's coming down slightly. It's touching the lower Bollinger Band here. And as you scan through here, Visa has got earnings in next 66 days. Its earnings is done. And if you're a fundamentally inclined investor, you could just click on financials right here. My favorite is the financials in this platform here. It's a great platform here. You could click on more financials, and look, it gives a nice view of Visa here. Look, we got net income and net revenue, net income. As you can see here, company seems to be doing pretty well here. Look, revenue went higher, and I think it's doing pretty well here. So that's why I'm not too much worried about Visa. You got various criteria here. You could also look at the earnings to see how the company's earnings are. Look, it's been surprising on the earning. As you can see here, EPS nice and high, nice surprise here. And the revenue also, keep looking here. They're surprising. What's reported is more than what's estimated. That's also a great one to look at. All right, so now we can close this up here. That's basically buying the call option. Similarly, you can look at other strategies here. I will not go through them in super detail here. Selling put options is one of my favorite strategies here. Look, you could click on it, and look, we got let's see here, just 48 stocks, and you could look at the filters here. I'll quickly flash very simple filter here. Look, we got average volume here. I could drag it all the way up here, and look, similar criteria here. Because we are selling put option, we want to make sure the volatility is nice and high. So as you look through here, we are saying volatility is above 2.5. Otherwise, it's almost same criteria. And when you're buying put options or call options, you want to make sure companies are fundamentally good. That's why we are looking at the revenue here. Revenue is positive. Net margin is more than 10% here. So you want company to be solid here. That's why we look at these criteria here. All right, so that's about buying the put options. We got list of stocks, as you can see here. I will also click this, and we could save this also here. This is selling put options. Very simple here. All right, so now, then we got a few more strategies. Probably I will, I will not go through them in super detail. And what we can do now is we could look at, one more platform here, which is FinViz. I know many of you look at FinViz platform. Very simple platform. I love this platform for their simplicity. You could look at right here. I got various things here. Look, you could look at the buy call as an example. We got buy put and sell put and so on and so forth here. So buy call is right here. So if you look at the buy call here, out of all the stocks, now we have just 91 stocks. You could look at these stocks for buying. And what you could do is, my criteria is super simple, something similar like before here. Look, we got market cap over 2 billion, which is good, and we have net profit margin positive. We want fundamentally good companies when you're buying call option. We want price to be over $15. You could bump it up to 30 also if you want. ATR or average to range to be above 75 cents. And you want the 52-week high low 10% or more below. You don't want to buy when the stock is at 52-week high. That's why we have this criteria here. And then we got average volume more than 2 million shares, average 90-day volume. And then we got, we're looking at just stocks here. That's why X, funds. And we want gross margin to be over 20%. And look at not overbought. We want stock to be oversold. Look at the RSI, to be less than, I think here we are choosing, let's see here. Yeah, less than 60 here. You can also say less than 50 here if you're conservative. And then we got a few criteria to make sure these are good, fundamentally good companies. All right, so that's about buying call options. Another favorite strategy of mine is to sell put options. You could do same thing here and go into sell put. And look, we got few stocks to sell put. It's just 29 stocks. These are, as you can see here, these are really good stocks. Look at the volatility here. The volatility weak over 8%. This is a key criteria when you sell put option, along with the other criteria that you can see here. So this is another platform here, and you could look at other things also. It's a similar criteria. You could also look at buying put. I know many of you like to buy put here. Same strategy when you're buying put here. Only thing you're looking at is you want to make sure the volatility is not super high here. So we have volatility weak over 3% here. You don't want volatility to be super high here. So that's why we have these strategies here. And when you're buying put option, you want to make sure stocks stocks are super at least hot. So I would say I would look at the RSI here. I would say RSI to be overbought. At least say 70 is a good one. You could go around this here. Or even 65 for that matter. So you could do something along those lines here, say 65. So right now, looks like, at least in this platform, we don't get too many here. You could also drop the volatility here. Yeah, in this platform, you're not getting too many of them. And the next one is really one of my favorite platform is barchart.com here. In bar chart, you could go into this stock screener here, and you could go in here and go into say my favorite is really to buy call or sell put here. You could go into buy call. Right here, look, we got buy call. You could just select this here, and then you could go into I look at options view here. So you could look at options view. Look, we got 44 stocks here that you could buy call options right now. And I like this platform because it's a options oriented platform. Unlike TradingView and FinViz, this has got a few more criteria which are useful to buy or trade options. Importantly, look, sales growth you can find in other places also. But look here, I got important criteria here. We got here IV rank. Look, I'm making sure the IV rank is less than 40 because I'm buying call option here. and RSI is less than 55. As an example, you don't find IV rank in TradingView, or you don't find it in other platform like FinViz. All right, so that's very important here, and I'm trying to see one more criteria here. Let's see, this is buy and call. Let's keep going here. List price, 1 month average. So what you could also do is you could also add one more criteria here, which is option open interest. So I can just say here option open interest. So total open interest, you could select this one here and you could add, and I want total open interest to be at least greater than 100,000. I don't want to buy when the option open interest itself is low. So let's go with the 100,000 here. There we go. So we could go ahead and see the results. Look, now we are down to 32 here. I will save this screener and I will save it as it is. That's good. Buy call. All right, so look, now we got very small subset, 32 stocks here. You could go and buy call options for these names here. Look, we got nice IV rank here, actual implied volatility, RSI, and so on and so forth here. It's a good one here. And then you could look at selling put options, another strategy, my favorite strategy here. You could go in here and say sell put. And look, it's a similar criteria here. I'm saying here open interest more than 1,000. You can also bump it up to 100,000. There you go, and you could see the result. It's very simple here. IV percentile, I'm saying here more than 40%, as you can see here. There is also IV rank. You could use IV rank also. Look, I used IV rank also down here. Look, IV rank is also greater than 40%, and RSI to be less than 55. All right, so let's go and see results here. Should be very low number. All right, so we got just three names here to sell. This is actually selling put, as you can see here. And let's look at screener view here. And look, you can sell put for these mainly because look at the RSI here. RSI, this is a selling put. So you want RSI to be a little bit lower. That's the scenario here. Below, say 55. You want IV rank to be slightly high, as you can see here. IV rank and IV rank is slightly high. That's when you make some money selling premium. All right, so with this, now I will jump into Thinkorswim platform here. Many of you might have Thinkorswim platform. It's a great platform. So you could go in here and you could go into Thinkorswim platform into scan tab here. In the scan, I got various criteria here. You could go in here and load a scan query here. And I would say stock hacker. You could go with the stock hacker, which is a good one here. And you could go here and say, look, I got buy call right here. So I could say buy call and just scan, as you can see here. So let's wait for this to come up here. In the meantime, I can talk through some of these criteria. Look, we got here 54 stocks that you could basically buy call option here. And my criteria is very simple here. I want the stock price to be above 25, as you can see here. Market cap to be more than 1 billion. Beta to be minimum 1. It trades along with S&P 500. Option volume is more than 100. Option open interest more than 200. Gross margin more than 30. Stable stocks, and so on and so forth here. So we got about 54 stocks here. If you want lower number of stocks here, you could even bump this up slightly here. You can say 300. One of the reason I don't particularly like these open interest numbers in Thinkorswim is because it it does not tell you total open interest for the stock. Instead, it looks at open interest for few option chains. That's why I particularly like the bar chart scanner for the options more beneficial than thinkorswim. Look, now we narrowed down to 53, and you could even bump it up to minimum 500. As you increase it, you'll get better quality names and better quality stocks and lower number of stocks. Look, we got 53 here, and for Chuckles you can even increase it to 1000 here, so that way you can get some good numbers and go from there. All right, so let's scan this up here. So you could go with this here. Fundamental thing is same. When the implied volatility is high and RSI is low, you could sell put option, and look at the criteria that I talked about here. When the volatility is low, you want to be a buyer. When the volatility is high, you want to be a seller. Look, we got the stocks here. I could just go and save this here and just say save scan query. This is buying call. And similarly for buying put, you could go here and we can load up the scan query here, and I could go to my my stock hacker and go into buy put. Actually sell put, we can look at the sell put, and look, we got criteria loaded up here. I could just scan and look, very few names that you could sell put option and make money here. You could look at these names and go from there. All right, so with that, let's jump in here. I will also take you to my Excel spreadsheet. One thing I noticed is all these platforms, you got either stock oriented platform or option oriented platform. A combination is very hard to find. I like the one platform which is a bar chart, but it lacks many of the fundamentals that I would like. That's why I end up creating my own scanner here with the data from bar chart, stock rover, great with the fundamentals, TradingView and FinViz, and bring them all together and go from there. Look, we got what I will do is I will just do a auto filter here. Look at the full universe. Look, we got total 2,800 stocks here. And what we could do now is we can look at our strategies. First strategy we'll look at is buying call option strategy. I could just click on it. It will run Excel macro, and it will basically look at the scenarios like we talked about, and it will filter down a few stocks. As you can see here, the filters are very simple here. I will take you back right here. So we are buying the call. As you can see here, we are bullish. We want RSI to be less than 50, IV percentile or rank to be less than 40. That's the criteria here. And if you go back here, look, we got those names here. From 2,800 stocks, we are down to 48 names. You could look at these names here. Look, we got Google right here, and you could right now you could buy Google call option, mainly because look at the RSI here. RSI in 14 days 46, which is below 50, and look at the IV rank. IV rank is 30%, but the IV percentile or IV percentile is 25. So it's here a little bit, even though IV rank is not super high, it's about 30. That's why this got selected here. And you could make some money with Google with all this news coming up around Google and Chat GPT. Stock came down off late. That's why I kind of relaxed the criteria slightly here. I will rank more than 30. You could it's a good one here. You could buy call option here. You want IV rank to be lower when you buy call option. That's what's going on. You could buy here low RSI, which is RSI in 14 days 46, and low IV rank, which is below 40, and low IV percentile. So that's why you could buy this one here. Earning is done. Next earning is 425, and it's a great, fundamentally good company here. Look at the Morningstar growth is B, profitability is B, finance is B. Nice, $113 billion cash. So it's a great one. And if you want to know what strike to buy, typically you can look at these support levels here. You got 91, 80, and 76. And if I go back to thinkorswim platform here, we could just bring up Google here. if you want, when you want to buy call option, I would say, go a little bit higher, say 90 days out or so. The 89 works here, and you could go right here, and you're buying call option, which is right, this side is all call, as you can see here, and you want to go around delta 70 or so. Look, we got delta 66 here. This is a good one, and keep watching the number of open interest levels here. 65 also works here. Look, we got delta 66 here. You could buy right here, and look, some of the folks are buying out of the money. I don't want to go there. I typically stay at say delta 65 or 66 or even 70. There is no 70 here. I would stick with 66 and pay around $9. And say if I click on this here, look, I can pay the mid price here, $9.55, and buy this up here. It's a great one, and go from there. And if you want to see the profitability, you could also look at one of my favorite platform here, which is optionstrat, which is a great platform. You could go into optionstrat.com here, and you could go into and see if you can just go here and go build, and you can say long call, and you could say Google. All right, so look, we got a nice platform here. It's a good platform, so you could go into the graph mode here, and you could right now we're looking at Google, which is 19 May 23. So you could go into May 23 right here, and we are buying the Google at let's see here, strike price 90. Sorry, strike price here is 90. All right, so you could buy this call option here, strike price 90. You can go all the way here, and look, you are basically paying around $955. That's your max loss. As the stock goes higher, you'll make money. And right now it's saying break even is 5.5%. Typically, and chance of profit is 38%, as you can see here. So typically, when you when you buy call options, typically the chance of profitability is shown a little bit less. But great, fundamentally good stocks, you could do this strategy all day long. All right, so that's how you do it. And if I go back here, you got let's go back to the spreadsheet here. These are all the names. Look, I love Google, I love Amazon. All these stocks have come down. Look at the IV rank, IV percentile, all low here. And look at the RSI. From an RSI level, look, all these are beaten down. And if you want to look at great ones, you could even look at very low RSI. Look at, we got J&J, low RSI. And we got Chevron. Looks like all these energy names have come down here. You could buy some. Even Alibaba is down. When you buy these things, buy on a down day here. Don't buy on an up day, so that way you can make some good money. Pfizer is one of my favorite. Look, stock has come down big time. It's improving right now. You could buy some long-term call option for a cheap price and go from there. All right, so in this I got various criteria. I'm looking at looking at even open interest in my criteria. Look, I got open interest filter here. You can do open interest filter in other platforms like TradingView. That's one of the reason I look at open interest. Look at IV rank. Look, I got my IV rank filter. Also right here, IV rank and IV percentile, both are filtered here to make sure we get a low IV. All right, so that's about buying call option. I could click on sell put option here. Same story. It will kind of compile through in the volatility, open interest, and IV rank, IV percentile, and it will come up with the number of stocks to sell put option. Look, we don't have too many names to sell put options right now. We got few names here. Look, we got Wayfair, First Solar, and so on and so forth here. If you click on this, you'll get to know a little more detail. Look, Wayfair earnings is coming up next week. That's why IV is high. Look at the IV rank, IV percentile, both are high. And right now stock is Let's see here, RSI perspective. RSI is 48 and 41. That tells the stock is sold off here. Wayfair can surprise. That's why you could look at Wayfair, and you might wonder, if I'm selling put options, what should be my my strike price. For that, you could go into support level 1, 2, and 3 here. This is from TradingView. I would typically go with the support level, maybe say 2 or so. Right now, stock price is 51, as you can see here, and the support level 2 is 21. And you could look at delta also around delta 65 or so. You could look at the strike price and go from there. And we got First Solar, again a great solar stock. Of late some of these solar stocks are coming down. It's a fundamentally also good company here. Look, its growth is C, profitability is B, finance is B. It's a better one here. If you look at Wayfair here, look, profitability is D here, F here. So if you're a conservative investor here, I would rather go with the First Solar than Wayfair here to sell put option. Then you got Home Depot here. Look, it's again nice fundamentals, and look at the IV percentile. It's 49, and RSI is relatively low. You could sell put option on this fundamentally great company like Home Depot. And if you're like me, I love Snowflake. It's a great company here. Earning is coming up, 3-1, which is a couple days down the line here. It's a great name. Got clobbered. Look at the RSI, got clobbered here. You could even go further. Stock price is at 154. You could go around, say, support level 2 here, which is 107, or look at the delta. So let me take you back to Thinkorswim platform here. Let's look at Snowflake, which is one of my favorite stock. In this down market, it's dropping like a rock, as you can see here. And you could go maybe say 40 days out is good to sell put option, and you could go into delta. Say let's look at the delta here. Keep watching delta. You could go around delta here. Look, we got 125 here, and you could do $10 widespread if you're if you're a little bit risk averse. But if you're a little bit risk taker, you could go even lower here. Delta, say right here is good too here. Look, we got 13 open interest 60 here. You could go right here, get some $2.11 or $200. But if you're a little bit risk averse here, you could go with the spreading strategy. You could go here and you could say 120, 110. You could do it, or you could even do 115 and 105 if you're conservative. So if you can do like this, sell, you could say vertical here, and you are selling 115 and you're buying back 105. Say right like this, you get $1 here. You're taking $1,000 risk here to make $100. And if you go to my favorite platform here, which is this one, you could play that out here, and you can say Snowflake here, SNOW. And you could go here. We are looking at 31st of March. And I can go here and say 31st of March right here, and we are actually doing a spread. So let's do one thing. Let's remove this and let's add a spread. So we are actually selling a put. So selling a put, let's see here, selling a put at 115, as you can see here. Let's take it all the way to 115. Look, we are going all the way below stock price here, and we are buying a put. Let's say a buy put, and we are buying put at 105 all the way right here, 105. We are look, so we are, let's see here, so we are buying, and look, we got here theta and all these things here. So let's go back here to graph here, and let's go all the way here. All right, so we are making a net credit of $100, as you can see right here. We are bringing in $100 right here, and estimated margin is $100, $1,000. If you have a margin account, it will buying power reduction is $1,000. Max loss is 900. look at chance of profit. These put options have got very high chance of profit. It's very high, so that's why I love this strategy. I want to go way below current stock price. Current stock price is 154. We are selling a put spread at 115, which is much below. You could do such things as the stock comes down, implied volatility goes through the roof. You could do these strategies. If you're a conservative type investor, go with the little more conservative names like First Solar and Home Depot. But if you're a risk type risk taking person, you could go with the Wayfair and Snowflake and go from there. I know many people do this strategy just for the ETFs like SPY, QQQ, IWM all day long and keep bringing the money day in day out. All right, similarly we got a sell call. This is when stock goes higher. Look, we got the criteria right here, selling the call. Like, look, it's a bearish. You want stock to be having RSI more than 65. You want high volatility, and you want to be within 45 to 50 days to expiration. So you could go right here. Look, there is only one stock that you could sell call option, which is Tesla. It's a great one. Look, fundamentally great. RSI, look, it's 66 in 14 days, 64. It's telling you, it's getting a little bit tired. That's why RSI came down from 66 to 64. So if your direction on Tesla is, hey, it's went too high too fast, you could sell some put spread, call spread here, or call option, make some money here. I recommend call spread for stocks like Tesla, which is super active. You don't want to get killed. And last but not least, you could click on buy put here and look at put option buying strategy here. And look, strategy is simple here. You want to make money as the stock comes down. You are bearish. You want to look at stocks which have gone up too fast, and you want IV percentile to be lower, so that way you don't pay too much premium buying put options. All right, going back here, look, we got few names here. We got Cisco. Cisco announced earnings, stock went higher. Look, RSI went shot up here. Good time to basically buy some put option, taking advantage of stock coming down, and make some money that way. And you got BP here. BP, look, same story here. Look, it's actually now it's slightly coming down by looking at the RSI. RSI 14 days, 67 here. It's getting tired. You could play that game here and fade the movement by buying a call option. And then you got General Mill here. Look, it's super strong at this time here. You could even buy some put spread here and make some money and go from there. So with that, we'll wrap here. Thank you very much. Happy investing and trading. Please subscribe.